and focus in today's trading session. But let's bring on board Kunal and Sunil sir, who are joining us right now. Kunal, once again, we'll come to you first and talk to us about something that you had told us at the start of the day, and that has panned out like Shrishti mentioned. You did say that investors would buy the dip, and we have seen significant recovery. At least we've seen recovery on the index, and the broader market has been a whole different story today.
Absolutely, Srishti. Sneh and Srishti, yes, we flagged off in the morning that 24,850 thereabouts is a very important support. I think we managed to make a low almost precisely at the 24,850 mark on the index, and post that we've seen a very good recovery. So after being down almost 300 odd points at one point of time, I think it's good to see that the markets have recovered and come back to I would say quite a flattish territory for itself. Now, today's highlight is more in the market breadth, and especially at the start of the day, especially, I think the mid-cap index was flat to, just about flattish when the index was down 0.5% to 1%. That itself was a very strong indicator that not all stocks are showing signs of buckling down after this kind of a gap down opening. So which means that we are looking at a point where the markets would eventually want to digest all of this negative news flow surrounding, and we may see a breakout on the upside. So I still stand by with what I discussed in the morning, that this is a dip which one should be looking to buy into, especially given the fact that the markets are still showing signs of robust price action on individual stocks. You look at the volumes across individual stocks which are seeing good price movement, and that is also a very strong indicator that we are not seeing a very low volume kind of a buying. You're seeing a very high volume kind of buying for individual stocks. So that's also another indicator to watch out for. Over the next couple of days, I would expect at least a retest back to that 25,050, 25,100 mark where we closed on Friday.
All right, so that's the day coming in on Nifty 50. One can still look on to buy the dips when it comes to the index. And yes, of course, a decent recovery, what we are seeing on the banking index as well. But Sunil, share your thoughts on the once again rise in the geopolitical tensions and its implication on the markets, especially the Indian markets, because Sunil, we have of late seen that the markets do climb the wall of worry, and we have seen so many instances, especially in the past 2 years.
I think that's due to the strength of domestic liquidity. I think if you look at the numbers for the mutual fund industry, for example, flows have been consistent. And the gross flows, I think net flows were just below 20,000 last month. But if you see the gross flows, they've been stable at around 55,000 crores. So I think that in the SIP book coming in at about 26,000 crores means that fund managers have got adequate liquidity. But the nature of that liquidity is a little more tilted towards mid and small caps. That's why you've been seeing that consistently when global events have been happening, FIIs have tended to get nervous, especially this time because of the oil spike. They have tended to pull money out from the market, but domestic fund managers with ample liquidity have stepped in. And what reinforces this is the fact that the domestic economy is chugging along well. Today, the HSBC PMI index numbers have come in. Both the manufacturing and the services PMI are trading above 60, and the composite PMI is a 14-month high of 58. So the domestic economic news is good. Domestic liquidity is strong. So FIIs will be nervous because they apprehended that Iran would do something about the Hormuz Strait, and they expected oil to shoot up. But as we saw during the course of the day, oil was fairly stable, only hitting about 76. So I think that there is enough supply. Though 20% of the world's oil goes through the Hormuz Strait, Iran's oil that also goes through. If Iran is going to sustain the war, they can't shut their own ships from going. So I think to some extent, there was a little bit of a knee-jerk reaction to that. Oil may still trend higher based on what Iran does, but I think that FII's nervousness related to oil to India is driven by the 85% import that we have of our oil requirements and the fact that the currency will tend to weaken, making all our imports more expensive. So I think this is something that foreigners, when they look at it as a comparative play among various countries, right, they feel that, India, they can take money off the table. But domestic liquidity, as even this month, has been fairly strong. I think it's more than 60,000 crores of buying just by mutual funds. That's the reason that every such dip is viewed as a buying point. And these fund managers had their liquidity building up over the last 2 months, because while the earnings season was in progress, they were not fully deploying. So they were all at the end of May, they were sitting on pretty decent amounts of cash. And I think that has come through to the market this month. So I think that situation will continue. You will see volatility in the market because geopolitics obviously creates nervousness in foreign investors. But I think domestic fund managers are tracking individual sectors and stocks. And when they see the FII ceiling brings down those values closer to the average, Indian markets are not cheap still. We are still trading at a fairly, rich premium, I would say, to other emerging markets, and maybe at a nifty PE of 21, we are just about the long-term average. So we are not cheap yet. But fund managers are tracking sectors, and when they see dips in certain sectors because of the selling, they will step in to buy. So I see a period of consolidation in the market, but there won't be a deep fall because there's enough liquidity to support any stock price which corrects sharply. There will be buyers found in the domestic scenario.
Appreciate that view, Sunil sir. Let's slip into a very short break on that note. But before we do that, let's take you.
Let me also welcome on board Kapil Shah, who is joining us on the show right now. Kapil, help us firstly with your take on the markets. It's been a smart recovery from the day's lowest point. But do you see Nifty crossing and sustaining that 25,000 mark as we approach towards the monthly expiry?
Good afternoon, everyone. So from past 30 trading sessions, we have been seeing that the market is trading in the range 25,200 on the higher side and 24,500 on the lower side. But within that particular thing, there is one micro range which we are seeing that 25,000 as an upcapping thing and the 24,800 as a lower band support that we are seeing. So today also the market has seen some sorts of reactions from the 25,050 also level, and this particular level from past 10-15 trading sessions, at least 4 to 5 times market has reacted from this particular point. Yes, the market internal strength is quite good. After seeing some sorts of setbacks, we have seen the recovery. Mid caps are covering very fastly. They are trading on the positive note. So eventually, yes, this is what a matter of the confirmation that we have to see to make a little bit more bullish tone on the market. But 25,000 is the one particular level that we are seeing that once the sustainability over there we see, we can have the further view. But we are waiting for the 25,000 sustainability on that particular point.
So those are levels that Kapil is watching out for. But Kunal and Kapil, now time to get some of your closing trades, mid-cap ideas for the day. Kunal, what about you? Where are you placing your bets?
So in terms of the closing trade, I would look at Tata Power. I think that's a chart which is looking attractive in terms of risk reward. We've seen power stocks slowly and steadily, seeing some bit of buying. It emerged with Power Grid. Then I think last week we saw Power Finance sector also starting to look up attractive. So now I believe that Tata Power could also come back into a momentum as well as a turnaround mode. At current levels of 390, the risk reward is attractive for traders to go for a fresh buy.
All right, but Kapil, what about you? Which are the stocks that you are eyeing?
Yeah, eyeing on the Grasim, which is trading at a 2730 level. Technically, the stock has been a positive momentum. Then there is some sorts of a declining momentum is happening. But now the things are gaining its ground. So we are seeing some sorts of a bullish continuation sign right now, the 2730 level with a 2675 as in stop loss that we are seeing, and above to that the target potential we are seeing that 2850 will be the first upside potential.
Okay, so lots to watch out for. Grasim is something that Kapil is liking at the moment. On that note, we'll step into a very short break, a quick one, and we'll be right back to get more of Sunil sir's thoughts on where the markets are shaping. Hi there viewers, welcome back to Closing Trades. Let's talk about the last half an hour of trade, and before we talk about our markets and the recovery that we've seen, there's another spot of recovery that we're seeing and we're tracking very closely right now is the US futures as we speak, because what a recovery we've seen from the deep shade of red that we were seeing on the futures in the first half of the trading day. You have a Dow that's now slipped into the green. In fact, S&P and Nasdaq also these futures are in the green right now. Dow futures up 0.1%, S&P futures up 0.2%, and Nasdaq futures up 0.3% right now. This despite the escalation that we are hearing about in the West Asian region. European markets too are not doing all that badly. If you take a look in today's trading session, let's pull up some of the European markets if we can. And well, Stock 600 is down 0.1%, but you have FTSE that's absolutely flat, and DAX and CAC Nasdaq are down 0.2%. So it's not all that bad when you take a look at the global backdrop. Sunil sir, just on that note, I wanted to get your perspective on the kind of market reaction that we're seeing, especially on the US futures front. Do you believe that this escalation is now largely being priced in by the market and not much can go wrong from here, at least from the market point of view?
Because the US has also threatened further strikes. So what it means is that the likelihood that Iran's defensive capabilities gets crippled, because I think Israel is also now attacking their missile bases after attacking the nuclear bases earlier. So I think that what it means is that I think they see this as that Iran has not much choices, and that enough pressure could be brought in through China on the Hormuz Strait issue. I think markets are reflecting that because I think almost entire Iranian production is sold to China. So clearly China is an important factor there. So I think what the markets are realizing is that the surprise action by the US and the threat of further action would probably keep this from escalating, because Iran is getting crippled, day by day by these joint strikes. So I think that's where even oil prices, if you see, they were already at a 75 levels, and today there was a fear that they would cross 80, but even with the threat of a Hormuz closure, they've stabilized at around 76. So I think overall the world is absorbing the fact that US will ensure, I think, by further attacks that actually Iran may not be able to do much. I think it's a kind of a read that's happening. And to that extent, I think the world has also got used to these geopolitical shocks. So no longer are the reactions as extreme as we saw when the first Russia-Ukraine war broke out, or when the first Hamas attack happened on Israel. Now the reactions are far more subdued because people are realizing that these things don't last very long. So I think that's the fact that the market expects that maybe in a couple of weeks or a month or so, this situation would be behind us. So I think market is tending to read into the future. And as they say, right, you buy on the rumor and sell on the fact. So the fact that the action has happened has eased the thought processes of the market a lot.
All right, with this, we let you go on that. Mr. Subramaniam, thank you so much, as always, for taking the time out and speaking with us, and also giving us a sense what to make of the rise in the geopolitical tensions as well as its impact on the markets. But moving on then, and our correspondent Priyanka